Hey guys, it's Luran here and welcome back to my channel. Guys, in today's video I want to talk about Smile Direct Club, ticker SDC. Now this stock has tons of things going on, both on the fundamental side and the technical side. So in this video I'll be showing you guys why this stock is highly likely to experience a short squeeze in the next 1 to 2 weeks. And also I'll be going through 4 to 5 fundamental reasons why I think this stock is ready to move to the upside, and I'll show you guys 3 to 4 technical reasons why I believe this stock is about to explode. And it can start as early as February 22nd, the week of February 22nd, because I know the 21st is a holiday in both the US and Canada. So if you guys are interested in seeing what is the next big short squeeze opportunity in the stock market, you certainly don't want to miss this video. And guys, if you're new to the channel, remember to subscribe, smash that like button. It helps with the algorithm, it helps the channel to grow, and helps me to continue to bring you guys premium quality content. Now let's jump right into it, guys. We'll jump right into the charts. I'll show you guys exactly what's going on with Smile Direct Club. Now you guys know this stock has been taking a beating as of late. Well, since it IPO'd back in 2019 September, we had nothing but a downtrend. You had a little push back in 2020. We pushed up into 2021, and since the start of 2021, the stock has been sliding. From the beginning of 2021, this stock is now down, let's see here, 87%. So if you're looking for the definition of oversold, this stock is in oversold territory for a long time. I did trade this stock back in November of last year. So we had a nice head and shoulder here, and we broke down. I think I did what, 3 or 4x or 5x, I don't remember quite well, but something around there we did on this breakdown. It was a straddle play. I went both long and short. And we broke down, and obviously I said I did 5x, and I offset the cost for the calls that I bought, because I think it was a 50-50 straddle that I had on this one. Now look what's going on here right now, guys. The same angle that the stock market used, and this is a very popular pattern that I trade on a regular basis. The same angle that the stock used here to break down, the same angle the stock has transferred. If you let's say you just copy or clone, I clone that and put it right here. The stock is using the same angle right now. And we have a nice head and shoulders setup here, which is telling me this stock is ready, and the technical pattern is ready for this stock to break to the upside. Now there's some stuff working against this stock right now, like the overall stock market is in a bearish downtrend right now, and that can impact how much ferocity we get on the breakout for this stock. But nevertheless, I'll jump into the fundamental reasons why I believe it can still move to the upside despite the bearish overall market. Now let's jump right into it. Now if you're following the news on this stock, you'll see that SDC, most analysts are forecasting this stock to go a little higher. There's a lot of hold on it right now, between $5 and $6. As you can see here, Finviz target price is $341. This is the big number I want you guys to look at, guys. 33.17 short float. So this is very high, guys. This is short squeeze territories. When 33% of the float of a stock is shorted, that's the definition of when you get a short squeeze. Because what's going on here right now, guys, this stock is down 87%, and the shorts are not about to leave this stock alone. There's so many stocks in the market that are way up there. They're up 1,000%, 500%, but shorts aren't short in those stocks. They're short in this stock, and rightfully so. This stock has been, look, the last 3 quarters here, the stock has been missing on its earnings. So I get it. But when a stock is down 87%, if you were a short seller, it's about time to leave. It's about time to move on to the next stock that isn't doing so well. But these shorts aren't leaving, and that's why we get short squeezes, guys, because short sellers, they overstay their welcome into many of these stocks. That's the situation that we have going on Smile Direct Club. We have the nice head and shoulder here. We have the same angle that we used the last time we're using right now. And on Friday, you see we had a nice hammer candlestick right there on Friday. Now, the overall market was bearish on Friday. So what's impressive about this candlestick on the 18th of February is that while the overall market was bearish, this stock wasn't bearish. The stock completed the pattern, obeying the same angle that was used there, and the stock completed a nice head and shoulder. And if you look at all the ticks here, we have 1, 2 connection, 3 connection, and this stock is ready to break out because there's not much room here. And usually a hammer candlestick at the bottom there of these wedges, based on my experience, is an indication that this stock wants to break out. Now we got earnings coming up on the 28th, so my forecast is that this stock might make a run leading into earnings, and it's possible that it can sell off on earnings if if the report isn't so good, because some of the information out already is that this stock is making some strategic plans. Let me jump right into that right now. And these are some of the fundamental reasons why I believe this stock could move to the upside. See, Smile Direct Club moves up on new strategic actions. Now, this stock, they're taking several actions strategically. They're cutting their workforce. They're pulling out of 8 countries where they're providing services right now. I believe they've listed them here: Mexico, Spain, Germany, Netherlands, Austria, Hong Kong, Singapore, and New Zealand. They're pulling out of those countries, at least for now, so they can better manage their costs and their operation altogether. Because I think they expanded a little too fast, too soon, because things got out of control for this company, and they weren't able to control their spending. So I think these move, well, it's tough cutting the workforce and pulling out of all these countries. I think they'll string the operation, and they'll be able to focus on their key business here in the US and a few other countries. So I think strategically this company is set to turn things around, and we can see a better earnings report. I don't know if it'll be reflected in the Q4 come 28th of February, but I can see the next couple of quarters where this company starts to turn things around. So strategically, I think they're moving in the right direction, and I know investors are the ones who are pushing for these strategic changes to take place. The other thing on the fundamental side that I think can potentially happen, this is just my thought, right, is a potential takeover. Now, there are a lot of big players. We got like Align, which is a top company in this medical device space. I heard a lot of rumblings that there's potential that Align can take over Smile Direct Club, put a bid to buy over this company. Again, that's rambling that I'm hearing, through my grapevine. And things like that, if that should materialize, you can see this stock just skyrocket, because it's certainly undervalued right now. Now, let's look at the market beat. Now, market beat has a high price target of 11, average of 5, and a low of 2. So even if we go to the average of 5, this stock, easily can double from where it's sitting right now. And like I said, from a technical standpoint, the stock is in a great technical chart right now. It's oversold, and it's completed the technical play that I'm looking at here right now. And then we got the short, like I showed, the short interest, guys, 33%. That's ridiculous. That's time where the shorts will get their hands handed to them. So if they continue to stay short on this stock while it's in a technical setup, and the company is doing things to really turn things around. So those are my key reasons why I believe that this stock will take off and move to the upside. If this stock should break, let me show you guys here. You see this line here, guys? This is my resistance line, and this is my wedge pattern. Now let's talk risk, guys. I don't enter trades without knowing what's my risk level, what's my target level, and what's my entry level. So I'll disclose to you guys on the 18th, February 18th, I entered position. I bought some shares in this one. I didn't buy any options. I bought shares in this one. And also, not Monday, but Tuesday, I'll be buying option. Doesn't matter where it starts. Now, see this line? This is my risk, guys. Anything opening and closing below this line here, guys, that's your risk. You got to get out. It means that this stock is moving to the downside. So let's say Tuesday the market opens below this line, opens. I'm out right away. The fact that it opens onto this line, I'll be out. Now, if it opens here, I'll be buying my call options. I'm buying call options for 3 for next week. So 1 week, 2 weeks, for 3, and then I'm going for 350. I know that if we get a short squeeze, this thing will rip right out of there, and it'll be, you know, game over for the shorts. And like I said, my target is 3 and 3.5. There's a big gap to fill up here, guys. You see this gap here at 528? If we get a massive short squeeze with great volume, this gap can get filled easily in the next 1 to 2 weeks. So watch out for this one, guys. Wall Street bets, there's some rambling there already on this one. I know those guys like to look for these short squeeze opportunities. If they should jump on the bandwagon as well, that can further be a nice catalyst to really push this one higher. So that's my analysis for this one, guys. Like I said, Smile Direct Club, $3 target, $5, $5.33 target, gap fill. Your risk is this line at the bottom here. Anything opening on the bottom there, you want to get out, or if it opens inside here but closes on the day, because remember, I'm talking daily candles here, guys. Everything that you're looking at right now is a daily candle, 1 day candlestick that I'm looking at. And if it closes outside here, it's game over. You sell your position. Means that the bears are winning and they're still in control. But like I said, this is a nice pattern that I'd follow. It's a wedge setup. We have a nice head and shoulder to close out the wedge setup. We're making higher highs and higher lows right now. And yeah, we can see a breakout anytime soon, guys. It could be next week. It could be the following week. And the only drawback, like I mentioned before, is the one drawback is the overall stock market. Let's look at the SPY. You see the SPY is very weak right now, you know. Now, for the SPY to completely collapse, it would mean that it has to break these levels here at 427, somewhere around 427. The overall market will have to break these to make real lower lows. Because right now we're still making higher lows here right now, and we're still holding this 427 level. So the overall market has to break that, and then we can continue to see a big wash down. Now, just to give you guys some bonus tips, I'm getting some insight right now on the Bitcoin, because Bitcoin is trading right now. It trades 24/7, right? And if you see here, Bitcoin has broken a key level, guys, and Bitcoin is correlated with overall stock market. You got Bitcoin, you got SPY, the S&P, Dow Jones, NASDAQ 100. They're all correlated, guys. So what I observed here yesterday, the 19th, is that Bitcoin broke this key level, which is not good. It spells trouble for Bitcoin, and it spells trouble for the overall stock market. So Bitcoin could be going as low as $34,000 pretty soon. I don't know if it'll hold a double bottom and then move higher, or it'll just break down further. But that's something that I noticed over the weekend on Bitcoin. So opening next week, the overall market can start lower next week, because I can see Bitcoin already moving lower. So that's it, guys. I'll wrap it up here for this video. Like I said, Smile Direct Club, that's the big play that I have for the next 1 to 2 weeks, but the entry has to be February 22nd. If this thing open inside this wedge or on the top there, you want to get in on the 22nd. Buy shares, buy call option. That's the plan. That's the plan that I have. And 33% short interest, or the short float, that's ridiculous, guys. This thing will squeeze the next short squeeze, the next big short squeeze. So enough rambling there, guys. Again, if you're new to the channel, remember to subscribe, guys. It helps the channel to grow. Remember to smash that like button. It helps with the algorithm. It helps the channel to grow as well. So until next time, have a good weekend, guys. We'll see you in the next one.